I can't be the only one for a long time who heard terms like bear markets and bull markets and bearish investors and bullish investors and had no idea what it meant and was too afraid to ask. I'm going to explain it to you very simply. The way you can think about it is the way the animals attack. A bull has horns and it bucks its head up to attack. So a bull market is a market that's expected to rise or has been rising. A bear has big paws with big claws and it swipes down when it attacks. So a bear market is one that's going down or expected to decrease. So how does this affect investors and you as a retail investor? If you're bullish, that means you expect optimistic future news about the economy. You think stock prices are going to rise and growth is going to happen in the economy. Usually, bullish investors are heavily invested, meaning they have low cash holdings and they have low holdings of very conservative investments, such as bonds, treasuries, and cash. Bearish investors are pessimistic about the stock market. They think that prices are going to continue to go down, and they think that things are currently overvalued and it's not a good time to buy. You'll usually see these investors characterized by high cash holdings, high bonds, and treasuries because they think that current prices are too high and they're waiting for what they think is a shortly approaching recession. Many investors go so far as to be so confident in their opinion that bullish investors will buy futures and options, and bearish investors will buy things like options or even shorts, where they sell stocks that they don't have because they are so optimistic that in the future they'll be able to buy them back at a lower price in order to pay their debts. Making highly leveraged positions that are predictions about the stock market is incredibly risky, and we don't really ever recommend that retail investors make risky plays like that. There's a classic phrase from Warren Buffett that says, time in the market is more important than timing the market. That's something we believe in, and you're almost never punished for being consistent in your investing journey and continuing to invest faithfully without trying to make super precise predictions that could be very costly if you're wrong. Now, when someone says that they're bearish or bullish on the stock market, you'll know exactly what they're talking about and sound smart at the dinner table. Follow for more financial advice.